Hey, Bulls, how we doing? It's the Sherpa here working for you on a Sunday. I hope everybody's having a good one. Down here in Austin, the weather's incredible. It's perfect. Um, but I've got some things to talk about. Let's get right to it. I mean, no pleasantries on the days that we've got the Ukraine tensions mounting. We've got 7 rate hikes ahead of us. We had oil sell off, which is kind of a strange thing that I want to talk about. We got tech stocks, more like rec stocks right now. So I've got a good one for you. Do what you always do. Go to everbullish.com. If you're interested, buy one of my portfolios. They're $100. You can follow along with me and beat the market. And then also remember that the Substack is now the number 6 Substack in the entire world in the category of trading. And my intention and goal and certainty is that I will be number 1 one day. I'm going to bring you guys with me to the top of the mountain because I'm the mother effing Sherpa, baby. All right. We're going to bring myself into the corner here. We're going to put the screen share on with the new tab here. And if I didn't say it already, today's the 20th. This is going to be for the week starting on President's Day tomorrow. The market is closed tomorrow, so don't sweat that. I normally put these out on Monday when the market's closed, but I want to get this out to you guys because honestly, it just makes me feel good to tell y'all what you need to hear early. So, Bulls, we got a lot going on this week. We have the Russian invasion fears. We have 7 rate hikes that we're looking at. By the way, that's not going to happen. And then we also have tech stocks, more like rec stocks. What do you buy? What do you do? And we're also going to review a couple options trades that I recommended to you guys and show you how valuable that is. So remember, hello and welcome, Bulls. We got a lot going on this week. I don't need to pound the Russia thing into your head. What we're going to do is we're just going to look at the headlines. This is the headline from Market Watch this week. I think this is a really cool imagery here. It's kind of interesting. And this is why I wanted to tell y'all some of the imagery we've got going on and how it relates. So we have, will the Fed rate hikes crush the stock market? Here's why speed matters. The death cross. Remember, I made a video about death cross. Maybe I'll link it at the end here. If you're one of my Substack followers, you know how to trade that. And the NASDAQ composite on Friday for the first time in 2 years. So that means that the 200 and the 50 changed positions, with the longer term moving average of the 200 being on the top and the shorter to moving average of the 500 being on the bottom when you plot those lines on a chart. But again, you'd know that if you were a real OG bull. Go sign up for the Sherpa Substack. And that's a bearish sign. We also have stocks ending lower on Friday for the slump for the second week. And again, Russia and Ukraine. But the imagery I wanted to talk about here is kind of interesting. This is a NASCAR, and it's got the Fed on top of it, right? So speed matters. Here's the deal, and here's why I don't think that the Fed is going to do what it should do, which is raise 7 times in a row. And the reason that they're not going to is that there's rules, just like in NASCAR. There's rules on how big your engine can be. There's rules on how big your spoiler can be. There's rules on how jacked up on caffeine the driver can be. There's also rules on how the Fed has to implement its policy. And these rules weren't around back in 1986, the last time we saw this much inflation numbers in the CPI. So what I'm telling you is that the Fed is not going to raise 7 times this year. I'll be a monkey's uncle. I'll give you $100,000 if they do. All right. But interesting analogy there, right? With the rules. I hope you guys are following me on that one. If you're not, whatever, go find another channel. You're already paying in groceries and gas. Here's what consumers will feel the next sticker shock. Inflation is turning some shoppers off of to off-brand products to save money, but they aren't always cheaper. I don't really care about that. That's there for all the old ladies and old men that are reading this and want to complain about the economy. Shake Shack to raise prices again in March. They have a terrible burger. I'm a Whataburger man all the way, and I'm happy to pay whatever they ask for. And then Russia extends troops, drills. Ukraine appeals for a ceasefire. More stuff on Russia. Tech employers in the Ukraine are preparing to use crypto in lieu of cash. Who's been saying that and screaming it from the top of the mountain all this time? If you don't have Ethereum, go buy it. I like Bitcoin too. They pulled back. Would have been a nice dip trade if I would have sold out, but I'm still holding longer term. And then we still have COVID in the news. So let's do a teach back. What did I just tell you? We've got COVID. We've got tech. We've got Russia. We've got Russia again. We've got inflation. We got inflation again. We have the Fed rate hikes. We have the NASDAQ and the death cross. Is this a time that I want to be all long in an index fund? Probably not. This is why you follow the Sherpa. This is why you invest on your own. This is why you educate yourself. So you're not stuck holding the bag. So COVID is still hanging around. Crypto is doing what crypto does. I already told you all about that. We've got the frackers holding back on production as global oil tightens. And here's my big hypothesis. This is going to tie in well for how I'm going to trade this week. So on Monday, the market is closed, but we do have a couple companies, energy companies, that is Helix, Nexitier, Next tier, they're a great company from what I've been hearing from all my men in the oil patch, all my bros in the oil patch, all my oil patch worm OGs out there, Williams Company, as well as Apache Corporation. So we've got some mid-cap oil hitters who I'm always telling you guys to buy coming out on Monday, and the market's closed. And we have this volatility and oil sold off. So remember, I put out for my Substackers that followed the ERY trade. ERY is the opposite of ERX. ERX is the 3-time long on energy companies. So actually 2-time long. And this is the 2-time short on energy companies. That made 2.5% on Friday. And I held it overnight and over the weekend. And on Monday, I'll be able to get out of it. Well, Tuesday, I'll be able to get out of it. But I'll have the look ahead on Monday to see how these bulls like Apache, Williams, and Next Tier do, and Helix, for that matter, do from their reporting. So my idea here is that I think that all the Russian tensions, I think that all this fodder that is causing volatility in the markets is going to have companies like the Williams Company and Next Tier and APA all give us an insight into what's going to happen on Tuesday, Wednesday, and Thursday. But I think that the amount of volatility that's already baked into the market is, even if they have good earnings, it's going to still be down. So I'm probably going to clip my ERY for, let's say, a 3 to 5% profit on Tuesday, maybe even Wednesday, depending upon if there's actually bombs flying and grenades flying and bullets flying in this quote war that we have going on, or if there's still going to be more standoffs in NATO negotiations. So this is how you can kind of think macroeconomically using micro trades and using the calendar, which is what the Sherpa does. So I'm still long on those ERYs, and I explained why. There it is, the hypothesis. You can read this again. If you want to read this, you're going to have to subscribe to my Substack, and this is how we're going to trade, and this is how we're going to make all the money throughout the rest of the year. Okay, Devin. We have Devin C, PE, and Feng. So what I wanted to do here is I have a lot of my bulls that are following me saying like, well, which are the oil stocks that you like? Which are those oil stocks that you said you like again? Or they're always hitting me. Here's the deal. Use this as a cheat sheet. Take a screenshot right here, and now you'll have this. But this is what I like. This synopsis for all you bulls. Devin, CPE, Feng. These are the old reliables. These are the ones that I saw 2 years ago at 10, and now they went up to 50, and now they're like at 45 and 30 again. These are the guys that hit us 5 baggers. So these are the medium-sized guys that I want to consider all reliable dip trades based on the oil prices that I've been showing you in these weekly game plans. CDEV is my new favorite that is going to be like the CPE or the Callon Petroleum last year. So CDEV, as I mentioned right here, it's like this year's version. This is the winner that's going to come hit the market this year. So this has gone from 1 to 8 and then now down to 7.5. I think it hits 20 at some point this year. So CDEV, if we see oil prices drop, go ahead and sell the position that you have, buy it back at 6, write it up to 9, sell it. And we're just going to do those swing trades throughout the year. MRO is a good one that's fully integrated and a little less volatile than the others. EOG, these are my favorite mega caps. So for those old timers, for all my country club bubs that are watching this, for all you sticks out there, 65, 75, 85 years old that want to have a stock to own and hold that has a good dividend and the smartest people in the room, it's EOG. And then I have notable mentions on CVX, XOM, and COP. And those are what these is really the 3 main comprisers of ERX when I trade ERX, but I'm trading it leveraged. American Express, guys, I'm telling you again, Matt from Cincinnati, one of my favorite bulls out there, one of my bros and a real trader, great trader in his own right, sent me this message that he had from Seeking Alpha. And he said, hey, I think the Sherpa talked about this about 3 weeks ago, and I did. AXP is American Express. It is fucking jumping off the screen. It is a great stock for interest rate hikes. It is a great stock. And don't forget that Warren Buffett has been buying the stock since the 1980s. I think it was 87, and he's never sold it. If Buffett does it, I'm going to do it too. And also the macros line up, and also it's cheaper. And also you're supposed to buy banks in raising interest rate environments. Also, let's be real. The economy makes its money off the backs of the debt owned by the poor people or the middle class. And that's what this stock does, right? What do credit card companies do? They let you buy that new Traeger grill, but you got to pay 30% to get it back. And when rates go up, that 30% goes up to 40%. On the crypto front, where are we? Bitcoin pulled back. This is another great entry point. The volatile tensions that are going on in the market because of the Russia and Ukraine thing, I think are going to cause crypto to pop. And I already alluded to that earlier. So 2 weeks ago, I made an article that we had Bitcoin at 37. We had Ethereum at 2,000. And now they've gone up to all the way to 44 on Bitcoin and now back down to 38. Should have sold it, didn't do it, wasn't paying attention, should have put my stop limit underneath it, but you could have done that. So that's a good swing trade. And then Ethereum, you'll know that's my favorite crypto of all time. And I also still own some Solana, but I'm underwater, and I own that Solana in a crypto wallet. I don't know why I don't have a chart here, but we're going to keep going. Oh yeah, I wrote here, remember back in 2/7, so that'd be 14 days ago, we were at 37 and 2,700, both ran up 20% at least and then fell back. So if you're hearing me, follow those swing trades. Got to think, I got to just tell you bulls again, this is a repost. Got to think Bitcoin and Ethereum break the upside at least to the previous highs of last year at some point. Bitcoin hit 60 last year, Ethereum hit 4,000. So I don't know if you're listening to me long-term holders. I don't know if you're listening to me leapers. I don't know if you're listening to me traders or cash holders, but it's better than cash. It's better than gold. And it's about as good as the average market. And if you want a little bit more volatility on the upside and to really invest in the future of DeFi, this is the way to do it. Total believer. I'm a crypto maximalist. Remember, you can buy my professional portfolios at everbullish.com. The Everbullish All Stock is 20 stocks. My favorite stocks this year with the appropriate allocation. The Everbullish Dividend is 10 stocks and a couple of ETFs. The Everbullish Balanced is a balanced portfolio of 10 stocks and ETFs. Then I got the 5-fund portfolio with money back guarantee, and that's using Fidelity Select funds. And that has the money back guarantee. So go buy that. You can click on this little button here if you are already a subscriber to the Substack. And then on the commodities front, I mentioned before, crude oil fell back down to 90. It was at 94 early last week. And then it went overnight on Thursday, Friday to 88. And now it's at 90 here. So this where my cursor is, this 90. I think that's going to probably go back up. And if Ukraine and all that other stuff happens, we're going to hit 100. But beforehand, remember, I'm currently long on the short side of that. So I own an ETF that sells the short side of that. And I think that this is just going to drop with the market. So I expect to sell that ERY probably, I keep saying tomorrow, but Tuesday, Wednesday, use those gains and then go back and buy these stocks that I like so much, which are CDEV, DVN, CPE, and FANG. You guys get that? I think you get that. I still love the banks this year. I have my 3 best bets from last time on here, but what I really want to do, thank you all for helping me get 1,000 views on my new website last year. Please subscribe to my Substack. That's the goal. I have so many people that are learning how to trade better than anybody else on the internet, guaranteed. And they're also clipping off money. You can profitable transactions, that is. And you can also go follow my Instagram, which is Ever Bullish, and you can see some of the wins from a lot of my consumers and customers that I have out there. I live and die for my bulls. I answer every phone call, every text. When you sign up for my Substack, you get my cell phone number and my personal email. Enough self-promotion. What I want to do here is, this is the trade from 2 weeks ago. This is the QuantumScape and the ARC trades that I published, where I said what we're going to do for these options is we're going to use straddles. So we did the straddle on QuantumScape. I saw in the news that one news resource is saying that it's going to go up, another one's saying it's going to go down. I'm a big believer that it's going to go up, but this stock is a SPAC. It's been beat up a little bit. Here comes 10, right? Okay, stock's up 25% in January, but here comes $10. I don't know what's going to happen, but I do know what I'm going to do is I'm going to buy some volatility. So QuantumScape, when I put this trade in, was at $16. And if you remember the break even, I put it right here, the break even for the calls. So there was about 3 times upside on it, was at when it was up $3. So that put it up 18. It did hit that 18, but I didn't do anything with the trade. And then now it is down to 15. So now I stand a profit, especially with this Russia, especially with these tech stocks selling off. I'm going to profit at $13.44 on this one. And this is why I buy volatility bulls. By the way, this is a March 18. So I have a whole nother month for this to happen. I expect to probably cash this at some point next week, but this is what's called risk off hedging. Actually, I'm buying risk because the market is not buying risk. So I bought the risk there. I don't care if it has to go up or down. And then here we are on the ARC side of things. So the ARC option, if you remember, this is going out even further. So this ARC trade is, I had 70 days when I bought it. So I probably got about 50 something days left. I have 50 something days left. And I'm going to profit at either $62.14 on the downside or $76.35 on the upside. This is from when I originally made this trade for you guys. And I know a lot of y'all followed me on it, but look at it now. It's at 64.80. I'm going to profit at 62.15. This thing moves between 75 and 68 in one single day. It's moving 8, 10, 12%, 15% in one day. So I'm going to either move more into the break even. I'm going to go ahead and clip it. And I'm actually going to leave my call outstanding after I clip it. So that way, when it starts to retrace, I make some more money on the upside again, too. I could go into more detail on this trade, but I'm not going to, because YouTube guys, you need to go follow my Substack, and I go into all the detail in the world on this thing. And then also remember, the best way to be trading right now is I would be a buyer of volatility, not a seller of volatility. And you can do that using the VIX, but it's going to screw you because of time value erosion. Or you could take these massively over leveraged and extremely risky tech oriented stocks and SPACs, and you can say, I don't care if they go up or down, I just know that they're going to move in the next month. And that's what I did here. Sherpa, it's the Sherpa. It's Chase at Everbullish. Go to everbullish.com and follow. Buy one of my portfolios for $100. You can also go through my entire library of 130 videos on there. Buy the Everbullish portfolios. Follow the Everbullish podcast for free. And then remember, bulls, it's AFG, LFG, LGR. Let's get rich. We're going to keep following along, and I'll show you how we cash these things. My goal is to provide all the information that I possibly can that I learned in 15 years as a public investment manager to uplift the consciousness of the average investor, tilt the table away from the mutual funds, away from all these trading resources out there that want your money and don't show you what they do. I'm the best there fucking is. Go follow.